everyone, and welcome back to Mining Network. So I'm joined with Brett Richards here, who is CEO of Goldshore Resources, and we're in Miami for the Mines and Money show. So thank you so much for joining us today.
Thanks for having me, Emma.
Absolute pleasure. So for those less familiar, let's start by getting a nice brief overview of the company.
So Goldshore Resources is about 2 years old now. We listed in June of 21, and we acquired a project called Moss Lake from West Dome Gold Mines. And subsequent to the listing, we embarked on a 100,000 meter drill program. So all of 21, all of 22, and right up until January of this year, we've been drilling. We've drilled 75,000 meters, and we have a 4.17 million ounce maiden resource at 1.1 grams. And contained within that is a high grade shear domain of 2.2 million ounces at 2 grams.
So run me through the capital structure of the company.
Sure. So West Dome, who we acquired the asset from, they own 23%. But I have a very strong board, very strong management team, and an advisory board, and we have all invested in this company in significant money. We own about 11% of the company. The balance, 17%, is held by institutions in Canada and the US and Europe, and there's about 49% retail.
So let's dive in now to Moss Lake. So there's been extensive historical exploration there. So could you run me through the timeline in the past up until when you guys acquired it?
Sure. It is a long-standing project. It's been around from the 1960s. There was a historical mine called North Coldstream on the property back in the 70s and 80s. But there was about 200,000 meters of drilling done on the property before we acquired it. And mostly by Moss Lake Gold Mines in the 90s, 80s, and 90s. And when West Dome earned into it in 2011, they came out with a maiden resource of 4 million ounces, both at Moss Lake and East Coldstream. When we acquired it, it was dated, and it is a historic resource. And you don't build on a historic resource, you start from zero. But it's a great guide. But what we've done, we've isolated Moss Lake, and we've identified the high-grade shear domain within it, which I think is going to be kind of a game changer when we get to the next level of development, which will be a PEA for us. And the mineralization is about 35 kilometers long from the historical drilling. Now, our little section of that is about 3.5 kilometers, and our known strike at Moss Lake is about 11 kilometers. So there's tremendous upside potential in the resource, growing well beyond the 4.17 million ounces. And I have to caveat it, in November, when we put out the resource statement, we only had 40% of our drilling, our holes, in that resource. So we still have 60% to come into the next resource update we're going to put out, and that'll be in April next month.
So let's talk a little bit about the geology here. So I noticed that you compare it to Canadian Archean gold deposits. So talk me through kind of the structures, and you've mentioned a little bit about how it's hosted, but go into a bit more detail on that.
So the Shabanawan Greenstone Belt it's an orogenic deposit, but I think because there's a lot of dissemination within the region, it's never really been attractive as a mining investment or a mining exploration region, because when gold was at $1,200, $1,100, these 1 gram deposits and 1.1 gram deposits are very difficult to make economic. Detour did it, and Kirkland Lake did it, and they have a very large project. Their head grade's 0.9 grams. Others have done it and continue to do it. Rainy River and Cote Lake and Magino, and they're all very successful projects. Because we have these high-grade shear domains, which in some cases carry hundreds of grams over a half a meter, we're able to isolate that. And then when we go to do a mine plan on this and optimize a mine plan, we'll be able to sequence in the high-grade material early on in the mine plan, and then adjust where we're mining, whether that's down 150 meters and then move to a different sequence in the pit, or move to a different area of the deposit and continue to mine there. It really minimizes the strip ratio and brings the economics of that 2 gram material, in some cases even higher, but on average 2 gram material, it brings it to the forefront. So I think we're going to have a project that has a head grade for 1.9, 1.8 grams for the first few years. And then we'll sequence out and go to another area of the pit and go back to 1.9. I think that is going to be tremendous for the economics of the project. And I don't see any other open pit deposits at this stage of development that have a higher grade, with the exception of Great Bear and with the exception of Sabina. There are some anomalies out there that have some high grade, but we have I think we have a tremendous project and tremendous upside from where we are today.
So remind us, I know you've touched on it, remind us of that the current mineral resource estimate and how it kind of breaks down.
So we have 4.17 million ounces at 1.1 grams at Moss Lake. And contained within that, and I told you about the high-grade shear domain that we have 2.2 million ounces at 2 grams. That's within that 4 million ounces. We also have 850,000 ounces of historical resource at Coldstream. We haven't brought into the resource statement yet. Tomorrow tomorrow will be the 24th. We are putting out a press release of drill results at East Coldstream, and I fully expect that when we do our mineral resource update in April, we'll be able to take this from 4 million ounces, and I don't know what the number will be. Let's call it 6 million ounces. We'll be bringing East Coldstream into our resource statement, and we'll be increasing the quality of the resource at Moss Lake, because we've done a lot of infill drilling there. So, I don't want the market to expect that we're going to go from 4 to 8 because we've got twice as much drilling assays to come in. I think what we're going to see is the quality of the resource go up, the quantum to go up, but now we're starting to find a real project. And along that 3.5 kilometer strike, we still have extensive distance of known mineralization with historic drill holes that can extend this to 10 million ounces and beyond. And that's not arm waving. You can actually see a path to becoming a tier 1 asset of 10 million ounces.
So let's talk drill program now. So what have you been up to over the past 12 months? Then what does that look like at the moment?
So the past 12 months, we drilled like crazy, and we had a very aggressive program last year. We had to temper that program because of the macro situation, the geopolitical situation in the world. In February of last year, when the difficulties commenced between Russia and Ukraine, the market went a little wobbly, as I say, and a lot of investors went risk off. So we saw a lot of flight to liquidity, and we saw a lot of selling. And we're not isolated in that. Everybody in our sector saw their share price go down. In the equities, generally last year, underperforming, down 13-15%. In the mining space, down more like 20%. In the gold equity space, down 25%. And in some cases higher, even Barrick down higher. And in the junior space, down 50-60%, in some cases more. I think that's temporary. It's temporary because of the macro. I think we are going to see great projects come to the forefront, and I think we're one of them, where the return on investment coming in today is going to be multiples. It's not going to be a percentage that's double digits. It's going to be 2-3 times money from where we are today. And we're trading at about $8 an ounce today. Our peer group is trading at $30 an ounce. And the high grade peer group we have is trading at $90 an ounce. So we have significant potential to increase value and increase our share price throughout this year. And as an investment thesis, I don't think there's any better time to invest in Goldshore than now. I don't think there's any better time to look at gold equities and say, what am I going to protect against as far as inflation goes, as far as the macro goes, and the turmoil we see in this world will be the place to be able to get leverage on that.
So you mentioned that you have drill results coming out imminently. What can we expect from these results?
I think what we're seeing is just more of the same. I've always said that, and the reason I got involved with Moss Lake is because I thought it ticked every box. When I look at projects, there's the criteria that I look at is quite simple. I look at size and scale potential. I look at grade. I look at location and geopolitical risk, and I look at access to infrastructure. We are on the Trans-Canada Highway. We have 10-cent kilowatt-hour power on our site, international rail on our site, and we're 100 kilometers away from an international port. We're 100 kilometers away from Thunder Bay, which has access to everything we need to build a big mining camp. So the Shibandawon district is now going to be a big focus for major mining companies to come in. This is not a play on gold price. Our project works at $1,500 gold quite nicely. But I think where gold is going to be today at $1,800, $1,900, this is a project that is going to come to the forefront on every major mining company's radar very quickly, because the economics are great, but major mining companies want generational sized mines. They want 10 million ounces minimum. We can show them that. They want potential to go even beyond that, and we can show them that. What we haven't even talked about is we have a couple of VMS targets on our property and a historic mine, a copper gold mine. Our first drill hole into North Coldstream delivered 62.5 meters at 0.88% copper equivalent. It's a tremendous result at surface. So we have this critical minerals, the battery minerals optionality. It's a free option. I don't have capital for everything. This market has hurt us badly. It's hurt everybody badly. So raising money at this, I'd love to go raise $25 million tomorrow because I could deploy it with ease and create a tremendous amount of value, but I can't do it in this market. So we have to take some baby steps. So some things have to go on the back burner, and North Coldstream is one of them. Our focus is on creating a project around Moss Lake, and that will include East Coldstream as well. They're 10, 11 kilometers apart, 13 to the center, and it's mineralized all the way. So what we have to do is we have to demonstrate to the market that this is a real project with real potential. We tick all of those boxes I just talked about. And I think once the risk off profile in the investment community comes off, I think we're going to start to see an influx of capital come into equities, and gold juniors, because the equities will do you 1 times money. Gold equities will do 2 or 3. And juniors who, like us, who are well positioned, will do 10 times money.
So the jurisdiction, you've mentioned there about the jurisdiction and the infrastructure in place for this to be a really large scale, and obviously you have the mineralization to go with that. What are your neighbors like in the area? What evidence is there of, the potential scale here?
So we're surrounded by juniors, we're surrounded by privates. We're earning into white metals, which their property is to the northeast of us. It's along our strike. It was a natural fit for us to do an earn in with them. So we'll see that through in the next 3 years. We'll have over 18,000 hectares of property when we're done, with the Trans-Canada Highway flowing through it. We have a number of juniors around us, both on the copper side and on the gold side. This region is really known for a number of different deposits. There are rare earths there is lithium, there are PGMs, there is nickel, and there's a lot of gold, and there is a lot of copper. So our land package needs to be kind of, well understood. So that's why we flew a geophysical survey over it, to understand the conductors, and understand kind of where we should be focusing on the type of mineralization that Moss Lake has. We've done that. We know the extensions to strike. We know them well. We just need to get through our program of drilling and demonstrate that. So yes, it is a lot of arm waving until I can prove it. But I'm very, very confident that we can quickly demonstrate a path to 10 million ounces if that's what we want to do. And I've said this, and we've had many brainstorming sessions with board members to talk about what is going to add the most value. Is drilling us up to 15 million ounces going to give us value, or is putting together the highest quality project with a reasonable capex the right approach? If our capex on this new project, and if we take this to 6 million ounces, that'll be what we do a project on. The capex for that will be around 400 million. The production profile will be about 160,000 ounces. The cash costs will be around 850 with all-in sustaining under 1,000. And that's a $800 margin in today's market, and about $140 million of free cash flow a year. And companies like ours at this stage of development trade on 2 times cash flow. That's 280 million market cap. That project will have a $650 million NPV at 5%. We trade on 0.3 times NPV. That's a $250 million market cap. We're $36 million today. So we have a lot of scope to increase value for our shareholders this year by hitting the catalysts. And there's no guesswork. We know what we're going to deliver on. We know what we're going to do. And I think that's where the market will play catch up with us. So if people want leverage to gold, and they want leverage to gold junior equities, I don't see a better project out there.
And how does the experience of your team and yourself set you up for success within the industry?
Well, I've been in this business 36 years, and my VP of exploration, Pete Flindell, has been with me for about 15 years on about 8 projects, and he's well known in our industry. And Pete's approach is very conservative. We both worked for majors. I worked for Kinross. Pete worked for Newmont for 15 years. And we approach this like we do a major. We approach this like we're going to build it. Pete and his team have established tremendous relationships with our host community First Nations. We have 2 exploration agreements in place. We've been doing environmental baseline work for 2 years now, and we do training with our host communities. We employ them, and we have 15% of our workforce are women. So we have a really strong connection to the community. And when you're about to build a mine, whether that's 3 years from now or 4 years from now, you need that strong bond with the community. So that's how we've approached it. We're not just drilling holes and waving our arms and raising money. We're actually building this like it's going to get built, and we are going to build it. I built 3 mines in my career, 2 with Pete, and I think we're well positioned to be able to do this. But I see the potential here, and this is beyond our size. We are really talking about an asset that is tier 1, first quality, top of the rank, and my job is to try and create the value and to try and create the awareness in the community, in the investment community, to see that, this is just like Great Bear. This is just like Sabina. This is a high grade open pit development project that is going to deliver. And so that's my job. That's what I have to do over the next 12 and 24 months. And that's what investors are going to be able to enjoy.
So you've mentioned there about the next 12 months. Let's break that down a little bit on what kind of key things investors can be looking out for.
So we are putting an MRE out, a mineral resource estimate, a second one. We're going to be doing that in April. And our target is, as I've discussed, and I'm pretty confident that we're going to get well on there. This is not an endowment that has a closed end. This is going to continue to grow for a long period of time. And maybe I've undercooked it a bit, but I really do think that this is one of the largest endowments in our region. Beyond that, we are doing the metallurgical test work to support a PEA, and we're doing it to a PFS level. So we're going to be doing bottle rolls, we're going to be doing column testing, because we think that we may be able to heap leach our low grade material. Even if we get 50% recovery, that's a great economic return while we're processing the high grade material. And we have that luxury because of the high grade shear domain, which means a smaller plant, smaller capex, smaller tailings dam. And that is a project that is extremely desirable. So that's what we're aiming for. So we're confident that we can heap leach the low grade. That'll all come into kind of the metallurgical test work we do, the mineralogy studies, and then we'll do a selective mining unit, an SMU study, to understand how we're going to sequence this high grade material in. All these studies are going to be going on from now until the summer. And the next big catalyst will be putting the results of the PEA out in the market in September. And I think we're going to be well positioned to be able to do that. We're not drilling right now. Again, the market being what it is, we've chosen not to drill because it's not going to impair our ability to deliver on these catalysts. So beyond that, the drilling is simply going to support a feasibility study, and that's infill and bringing the quality up into M&I, and eventually taking this to a feasibility construction decision. We just felt that the use of capital today and raising capital at such a low share price just isn't the best interest of the equity story and the shareholders. We'll get there, but we need the market to move, and the market's not moving. And so, but we are moving, and we are moving fast towards what we think is a world-class project.
And just touching back on the drilling, the deposit is open at depth as well. Is there any plans to kind of drill deeper there and include that in the drill program?
That's a great question. In the first 8 or 9 holes we drilled, we went down 1,000 meters. We wanted to see what was going on. Pete is a very contextual geologist. Let's get a VTEM survey so we can see the context of the geophysical signature. Let's drill some deep holes to see what's going on at depth. Put all that into context, and then lay on the historical data. Bring in a structural geologist, which we did, to understand this structurally, because it's quite complex. It's quite broken up. So we did that, and then what we really focused on was all of these kind of drill targets. So I think where we went with our drill program was really guided by data. And I think historically, what they were guided by was a model. Let's just work to this model.
Yeah.
And I think we just took a different approach to it. So I think all the work that we've done kind of leading up till now, and there was no magic in saying we had a 100,000 meter drill program. We've drilled 76, 77,000 meters, and we've stopped. because we're preserving capital now. But you know, if this was a different market, I think we would be looking for 25 or 30 million dollars. We would take this to feasibility study. And but when to answer your question, those deep holes delivered mineralization all the way down at depth. So we have these shear domains which are subvertical. In layman's terms, they go up and down, and they're going to be accessible in an underground mine down the road. We probably didn't do enough to pull in a underground inferred resource. We may have now, but we can probably extrapolate down below a 500-meter pit. Our pit's at 350 meters now, but we can probably extrapolate down to 500 or 600 meters and hang together, a sizable underground inferred resource. But to us, again, this is about credibility. We used a $1,500 pit constraint, gold price pit constraint when we modeled. Why? Because the majors use that. We use $250 for mining, $12.50 for processing, and $2 G&A. Why? Because the majors do that. There's a lot of guys in this room that use $1,700 constraints, and they have more ounces. That's not what we're going for. We're going for credibility. Putting an underground inferred resource on is 20 years away in this mine plan, maybe longer. So is it really credible to add it just so you can say you have more ounces? Well, the market is not responding to anything these days. But again, we're defining the upside. We're defining the upside at North Coldstream. We're defining the underground upside. It's there. People can make their own decisions. And I think that's the mystique in this, is because, this is a generational size mine. People will take their own opinions, but the work that we've done is so credible and to a standard that the majors use. So I'm very, very confident that, when we go to that next stage of development, and yes, a partnership is probably the next stage for us. And when we go to the next stage, our partner will be confident in that, we work to a standard that is as good and in some cases better than what they do.
Well, thank you so much for your time today, Brett. It's been amazing to hear the story, and I look forward to following along and seeing what happens next.
Thanks, Emma. Thanks for your time.